Hey, what's up everyone? Chris here with Green Bar Trading, also known as Ghost of GBT on Reddit. I want to take a minute and thank everyone once again for tuning in to our weekly charting and technical analysis video. And before we get started today, I actually want to talk about something else real quick. I've posted a thread here, a discussion request, to ask everyone in the Reddit community here how we can sort of improve these weekly charting videos, or if anyone wants to see like a different format or anything like that. So take a look at that thread if you found these videos useful, and just offer us your feedback. Big Bear and I are trying to just come up with some ways that we can improve the content or get some more eyes on it and that type of thing. So take a look at that and feel free to offer us your feedback if you want to see like lessons or like a weekly Q&A or something along those lines. You know, we can change up the format so that it's something other than just technical analysis and charting. We can do questions and answers. We can do, like I said, we can do some kind of lessons or something like that. But just let me know. I mean, these videos don't take me all that long to do each week. So, you know, it's not really a big deal to change up the format and do something different. So, like I said, you know, thanks for tuning in, of course. Obviously, thanks for the subscriptions on YouTube and the emails and the Twitter follows and all that stuff. That's really awesome. We want to obviously keep people coming back and, you know, finding these videos useful. So if there's anything that we can do to improve it, feel free to let me know. That said, there weren't a ton of responses this week, so we're actually going to be able to get through all of these today. So I'm going to just start right here at the top and just go all the way down the bottom. There's some interesting ones I think that we're going to go through today. Netflix with their recent earnings and that type of thing. So we shall see what we've got. I have not looked at any of these charts yet aside from Netflix, just because I was trading it a couple of days ago, but we'll see what we've got going on. So next, first one up is going to be Netflix. And then we've got Tesla. We got Cara, UVV short. Cara, UVV, IPI, ATVI, NVIDIA, ATVI, NVIDIA. We've got AMD, Under Armour, the infamous AMD, our weekly AMD analysis video. IBM, Alibaba, and Cody. Baba and Cody. All right, cool. You know, the other thing that we can do actually is I have the newsletter that I send out every like 2 times a week. So I do it like every Sunday and Wednesday, and that actually has stuff that I'm going to be trading. So I'd be happy to, you know, share my analysis on that stuff as well, which might be a way that we could go. But, you know, it's up to you guys. I mean, I don't really care personally. So anyway, let's get into some analysis. So Netflix long. First of all, I loved Netflix right here where we were just about to break over 134. It looked awesome. Had a little volume expansion. We had a strong close on this day. I did not actually know that their earnings were coming up, so I actually put this in my newsletter when I sent it out on this day, on the 13th, or whatever that weekend was. I think that was a Friday the 13th, and then I think it was in the newsletter on Sunday. And then, of course, Monday, it gapped up and gapped through 134 and kind of ruined that setup for me. So I didn't touch it. And then 2 days later, we had this gap because of their earnings. So it still looks like it's sort of in profit-taking mode. I don't want to call it fade mode because this isn't really like a fading type of stock. I mean, Netflix obviously has super strong earnings, and their subscriptions and everything have been improving. And now they've got like, you know, their global subscriptions are starting to improve and starting to sort of overtake everything. And that's really, really good because that was one of the things that they were worried about struggling with. So, you know, their content is awesome. Their content's always improving. Their subscriptions are improving. So, and their earnings are going up. So, you know, it's definitely a strong company. But what I would be waiting for on Netflix is to see it start to find a base, you know, somewhere within this little gap. Because we have this gap from 132 up to 142, right? So there's about a $10 gap there. And I think it's probably going to try to find some sort of a baseline. And, you know, it might be where it stopped on Friday, right? Right around 137.50 or whatever this base is. You know, it might just be around there that we'll see it start to flatten out. But that's what I'd be looking for is, you know, some kind of indication that this thing is done sort of selling off And the people that caught this gap, that played it through the earnings release, have taken their profits and moved on. And then we'll probably see the real move, which is what happens a lot of times with these types of stocks. If it's a good company and they have solid earnings, what you're going to see is the stock will gap up, and then it's either going to go straight up or it's going to consolidate and sort of fill in the gap. And then there will be like a secondary type of earnings move where you'll see it, kind of move sideways for a few days and then take out the earnings day highs. And that's when you'll get sort of the real run. In this case, I think they surprised on earnings back here. And so that one kind of just went straight up. But even that, it gapped down a little bit the next day. And as soon as it went green, that was your opportunity to get in and take the trade, so you could have just bought it on the second day. In this case, because it faded a little bit, I think people might have maybe anticipated that they were going to have good earnings. And so it was already sort of priced in. And so now we have to basically just wait for it to show us where the support level is so that we know where to set our stop loss once we get in. And then once you know where to set your stop loss, then you just kind of let it rip, because Netflix is most likely just going to keep going up. This is a very strong company, and there's a lot of, mutual funds that are trading it. There's a lot of traders that are trading it. There's a lot of investors that are investing in it. So I do like it for a long. I just want to see a little bit of an indication that the bottom is in. It's only been 2 days, so give it a couple more days and see where it starts to bottom out, where it starts to curl back up. What I usually like to do is look on like a 30-minute chart, and I'll watch. Currently, I'd be watching this support level, and just see if that holds for a couple more days. And if it does, and we start to see it put in rising lows, where it starts to trend up like this over the course of the next couple days, then we just set our stop loss right here under these lows, and off you go. So there's Netflix. Next up is Tesla. Did Tesla have earnings also? On the 19th, after an upgrade. Oh, so they got an upgrade. Tesla's sort of like Netflix in the sense that, it's a stock that everybody knows, and, every time something good happens, there's probably going to be a run in it. It actually looks very similar to Netflix, where you have this long grind and then a gap up. Same thing on Tesla, has this long grind and then a gap up. So I guess I would be watching for the same exact thing on Netflix, right? It's just to see it, on Tesla, is just to see it prove that, this support area here is going to hold, and sort of see where the bottom ends up being after this gap on the upgrade. I didn't actually look at what the upgrade was, so we can pull that up and see what it was. Morgan Stanley, equal weight to overweight, and they gave it a 305 price target. So clearly there's a lot of room, at least in Morgan Stanley's opinion, for this thing to improve. So that's good, right? It's an upgrade from Morgan Stanley. Lots of shorts in it, so that's always a good thing. The only thing that I'd want to see is just some kind of indication that it's going to put in a little bit of a bottom here and, give us a place to put our stop loss. So there's Tesla. Next up, Kara. Don't really see anything in this at the moment. Really, the breakout on this thing is up here, right, at these levels, 1220. But you're going to find that stocks don't just grind up through a breakout like this, right? If it's a big resistance point like this one clearly is, because it's been, it was support back here in September, October of 2015. And then we had a stall there earlier late in 2016, and now we've just kind of ground back up into that level again. So to me, this needs a little bit of a consolidation sideways, and maybe a couple more tests of that 1250 area, and a couple more failures of the 1250 area like we got over here before it's really going to be a powerful breakout. Otherwise, it's just going to take too long to go through it. So I wouldn't personally trade this right now. This is a good trading stock. It can definitely move As we saw over here, we went from $9 to $13 in just 2 days. So it's low float. It's a biotech stock, so it's volatile, and it can definitely move once it gets through that level. But as we see right now, there's no real volume expansion or anything to indicate that there's traders coming in for it. So I'd be watching for a couple more tests and failures of the 1250 area, and then maybe in a couple weeks we might see something. And the other possibility is that they have some sort of catalyst coming, in which case, they release the news, and then we just trade it as a day trade, or treat it similar to Netflix or Tesla, where you let it consolidate for a couple days after the news comes out and then take the real move once all of the profit takers have kind of taken their profits and moved on. So there's Cara Therapeutics. Next up, UVV short. I love shorts. Universal Corporation. Damn, low float. 22.26 million shares in the float. 7% short interest. It's a little bit thin with only 217,000 shares average volume, but that's not terrible for me. I mean, you can see it's obviously had a lot recently. I don't really mind trading stuff that's 100, 200,000 shares in volume. But if you're a bigger trader, if you've got a bigger account, and you're going to buy 10,000 or 20,000 shares of something, it's more difficult to get in when you've only got, a couple 100,000 shares a day. However, if you're trading a $75 stock and you're buying 20,000 shares, you probably are not watching these videos anyway, because you obviously know what you're doing. But that aside, I do like this as a short. It looks like it's sort of losing momentum. What I like to do on these things is, you can see it's been following on a 5-minute trend here. It's been following this 50-period exponential moving average, which is one of the indicators that I use. I really like this as a guide for when these things are done or when they're too extended. And it seems like it has a sort of behavior of getting pretty far away from the 50 EMA and then stalling out and just going sideways, and then it gets far away from it again and it stalls out and it goes sideways and sort of lets that 50 EMA catch up to it. So what I'd like to do, and what I usually do on what I call these parabolic trades, where the stock has just gone straight up 8, 9, 10 days in a row with no rest, and then it starts to sort of lose momentum, or there's sort of a blow off on the chart. I like to wait for them to get extended intraday. So I would be watching for this thing to get, if we look at sort of where the high was over here, and high, what I mean by high is high relative to that 50 EMA, right? What's the biggest distance that it's gotten away from that 50 EMA? And and then, the further that it gets away from that, the more likely it is that it's going to snap back and correct versus just, moving sideways and letting the 50 EMA catch up. So what I'd be watching for is over here it was a 7150, give or take, that EMA, and the peak was up like 73.65, 73.50. So it had about, a $2 spread there between the price and the 50 EMA. So on something like this, I'd like to see a blow off on this chart where it gets like $3, $4, $5 away from that 50 EMA on a 5-minute chart, and that would be my entry intraday. So this is going to be a little more difficult to trade if you're not at your screen all day, just because you kind of have to be watching it, because when stocks get that far away from their short-term exponential moving average, it's going to happen quickly, right? It's going to be something that happens in like 20 minutes or so. And so with those types of charts, that's usually how I like to trade them, is once it gets to the point where it's starting to look like it's blowing off on the daily chart, where it's getting extended like this one really is, I like to watch for that extension intraday, because then you have a chart that's extended intraday and you have a chart that's extended on the daily chart. And when you combine those two time frames together, you have a really high probability of the trade working in your favor. So that's what I would be watching for on UVV. The other thing that could possibly happen is it fails this $75 round number. One of the things that I'm noticing on this is that the range the average true range, or the range of each candlestick, is getting smaller as it gets higher and higher. And that is one of the kind of telltale signs that the stock is losing momentum. And you can also see that there's nothing special about the volume other than it's been higher than normal, but in terms of like day to day, these last 4 days, it's been kind of the same, which sort of indicates that it's just like grinding higher, I guess, rather than, there's increasing volume or decreasing volume, which really indicates that it's losing momentum. So at this point, there's no real indication in terms of the volume what's going to happen, but the chart is telling us that it's losing a little bit of momentum. So what might happen is you might see it test 75 a few times and like fail that round number, and you can just short it with your stop loss over 75. So that's another possible way that this could work out. Okay, next up, IPI. IPI, was this a long? I think this was a long. Yeah. Okay, so IPI long. So low float, pretty normal short interest on this. Nice average volume, 1.69 million shares a day. Definitely has the ability to move, as we see over here. Went from $1.50 to $3 in 3 days, basically 3 or 4 days. So that's nice. And this sort of like agrochem industry has been hot also recently. There's a few stocks that have taken off out of that industry. But yeah, I mean, I like the chart. I guess what I would want to see is probably a reclaim of $2. It seems like you had some nice support on the daily here at $2, and it just sort of broke underneath that. So I always want to see somewhere I can put my stop loss. So I'd like to see it pop back above $2 and actually hold. You can see it tried. It had a ton of volume in the morning here on the 20th. It tried to go back above 2, and it just got sold off as soon as it got back up there. So if it can test 2 a few more times and then reclaim and hold above 2, then I think you have a good chance of this thing holding $2 and pushing back up towards 3 over the course of a few weeks. You can see that $2 has been a big spot for it for, over a year. It's trying to get over it here and here and here. And now it finally broke above it, starting to fail back through. And so it it seems like it wants to reclaim it, but it needs maybe a couple more days to convince everybody that it's actually going to hold and not reject $2 and kind of fall back down to this 200-day moving average. So that's what I'd say on Intrepid. Looks good. Activision. Oh, this is nice. I like this chart. Right under the 200-day moving average. Nice coiled, tight flag pattern forming. Very clean. This reminds me of Momo. Same deal, except it's above the 200-day moving average. So I've been watching this one for, I don't know, maybe like 4 or 5 days now. Just watching this coil. Right under a round number. You'll see it on the 60-minute chart. Starting to coil right underneath $22. That's a pretty obvious pattern to me. And the reason I like it is because it's real low risk over here, right? You buy this thing at $22.20 and set your stop loss at $21.80. And, it comes over 22 and you've got upside to like $28. You know what I mean? There's no real major resistance up here to stop this thing once it breaks above 22 or 22.50. So you can risk 40 or 50 cents on the trade for potentially $6 of upside. That's an awesome risk to reward ratio. And I see something very similar on ATVI. The only major issue on this one is that it has to go through that 200-day moving average. So that's probably going to be the key, right? It's going to test this a few times. It's going to try to get through 39.50, and it's going to flop the first couple times to test that 200-day moving average. But this is in a really nice spot right here. So I definitely like this for a long. What I would do if you wanted to buy it right now is set my stop loss right underneath that yellow line. All right, so 38.50 maybe. Give it down to 38.50. If it can't hold that round number, then you call it a bust for this attempt and you try it again the next time. Other thing I like to do is watch the 60-minute chart and look for volume early in the morning, the first hour of the day. If you see a lot of volume first hour of the morning, there's probably going to be a lot of volume for their whole day. So That's what I'd be looking for as an indication that sort of today's the day on this Activision. So there's that. Really nice chart. I like that. Oh, good old NVIDIA. I'm kind of torn on NVIDIA at this point. You know, we got sort of a double bottom thing going on here. Bounced off $100. So it looks good. I mean, set your stop loss under $100 and let it rip. See what happens. I mean, it's not a super convincing pattern for me. I just, you see that round number and you see it bouncing off that round number. That's a good indication that it's probably going to hold that. At the very least, you can risk $5 a share to make, if you're patient enough, right? This thing pushes back up to 120. You're risking $5 to make $15, so it's still 3-to-1 reward to risk. So that's good. I just would want to see it hold that 100. Best option, in my opinion, would be to buy it as close to $100 as possible. And then if it doesn't work, it doesn't work. If you get it closer to 100, you could even give it down to like these post-earnings highs from November, where we had this big support level at 95. So if you get it close to 100, you can risk the same amount, but you're actually risking, $5 to make $20 a share, right? Because then you're going from 100 to 20 with the same risk of only $5 a share. The only thing that you have to remember is just that there's always an inverse relationship between probability and reward to risk. As your reward to risk increases, your probability decreases, because the only way that you can improve your reward to risk is either to increase your target, which increases your reward, and that's obviously going to decrease the probability of it actually hitting there. And the other way that you can increase your reward to risk is to reduce your risk by tightening your stop, which also increases the probability that it's going to hit your stop, thus decreasing the probability that the trade is going to work for you. So there's a balance that you need to find there. But in this case, strong stock, big round number like $100. This thing should hold it. And if it doesn't, then you just cut it off and you take a small loss. So there's NVIDIA. Next up, AMD. AMD, don't see any reason to buy this thing right now. It needs an indication of strength for me at this point. This has been on a massive, massive run for the last year, and it's just kind of spent. I mean, I traded this thing at $4. I traded it at $4.50. I traded it at $5 and $7 and $9 and $10 and $11. Basically every single round number all the way up, I was longing this thing, and it's just kind of spent. So it's going to need some time, I think, to just chill out here and make a decision as to whether it's going to hold $10 a share. Maybe it's $9 a share. Maybe it comes all the way back down and tests $7.50 or $7. It comes back down to this major trend line, because it's still sort of, it's gone on a pretty big run away from this 200-day moving average. So, I would just watch it, I guess. There's definitely opportunities to make money in this thing, but watch it for when it has news. Watch when their earnings come out and things like that. Those are usually going to be your indicator that this thing is going to continue its uptrend. But I do like it. I think that it just needs to do something to convince me, I guess. That's all I would want. So there's AMD. Next up, Under Armour. Long, I'm guessing. Oh crap, we missed X. Let me go back to X. US Steel. This one's been kind of, these steel stocks, they went on a big run here. This thing doubled in just over a month. So this has got a lot of work to do to consolidate. With these types of trades, I always just watch for them to come over major levels. In this case, it's probably $36. I don't really like to anticipate this type of stuff because, it's most likely going to work, but I don't want to sit in the trade, with it tying up $30,000 in buying power for 3 weeks, while I'm waiting for it to break out. So I like to just trade these when they have a lot of momentum. It did definitely have a big volume expansion a few days ago. So I think if we look sort of on a shorter term time frame, if we see a pattern similar to this intraday and it starts to maybe take out that 35 level, that might be an indication that it's going to go again, and we'll see the volume sort of come in on that day. But it needs to do something to convince me first. So I do like that, but it's just, I don't think it's ready yet. That's all. So keep it on watch. Which one were we on? Under Armour? Yeah, so Under Armour long. This thing is just a piece of crap. I mean, look at it. Huge gap down, sideways, 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 never recovers. Huge gap down, sideways, never recovers. Gap down, sideways, never recovers. I mean, it's still $25 a share, so it's got a long ways that it could still fall, but I mean, it's under the 200-day moving average. It just does not look strong. So I would not touch this thing. There's no reason, in my opinion, to buy this right now. It's just doing the same thing that it's always done. Unless it gets some kind of a catalyst to reverse this trend, I just don't see any reason to touch it because it's just going to continue to do what it's always done. So I wouldn't touch that one at all. IBM. Oh, this is interesting. So this is nice. Even though this is a real thick, high volume stock, this is going to have a ton of shares in the float. 930 million shares in the float. I've traded worse. I mean, you trade something like Apple that's got 7 billion shares in the float, or Microsoft or something like that. So, you know, it does have a lot of shares in the float. But this definitely is a very strong pattern. Huge volume expansion on Friday, right into a very clean breakout at 170, round number break. Looks like 169.87, 169.92, 169.80. I'm just looking at these highs. 169.85, 169.89, 169.95, and then we closed above 170 on Friday. So that's a good indication. Also, we just had earnings recently. So I had this pop and then a sell-off, and then it came right back first thing in the morning, and we're testing highs pretty much all day. It looks like this thing wants to run. So I do like this. Despite the fact that it's IBM and I normally wouldn't trade something like this, it looks strong. It's going to be liquid. It's going to have a big range. You know, so even if you only make $1 a share, right? The stock that does 12 or 13 million shares a day, you can get some serious size. It's going to take a bigger account, I think, to make real money on this, unless you want to hold it for a while. But it does look good. So yeah, I definitely like it. I'd be watching, I guess, for a red to green type of move where it opens up a little bit red and then takes out 170 from underneath and continues through this high of day from Friday. So that looks good for Monday. Alibaba. Alibaba, similar to Activision, similar to Momo, same exact coiling pattern. So this is good. You guys must be watching my videos because this is like my favorite pattern. This coiling flag type of thing. So again, you know, it's above the 200-day moving average. Alibaba and Momo are both Chinese also, I believe. I wonder if that has something to do with it. Internet software and services. Yeah, same industry. So I wonder if there's like a Chinese internet software company thing going on where we have them all flagging. Yep, Sina also flagging. This is a Chinese internet software company. NTES also flagging. Momo flagging. Ren, sort of. Ren's a piece of crap though. But they all have a similar pattern. So, you know, this is something that I notice actually with, you know, when you start seeing an identical pattern on similar types of stocks, usually what's going to happen is there's going to be like some kind of fundamental reason for that, like something in the news in that country or something. And so you might want to dig in and figure out what that is, because there might be something that when it comes out, right, when it finally resolves itself, it's going to send all of these things, Momo and Alibaba and Sina and whatever these other ones were, NetEase, Ren, and there's probably more if we do China and Hong Kong. Nope, guess not. But there's probably related ones. Internet information provider is probably going to be another one. Baidu, Beta, CCIH, Fang, so all of these things, they're going to have potentially similar patterns. Sohu, there's another one that's kind of breaking out of its flag. Wuba, YY, yeah. So, all of these things are going to have similar reactions. So that's what I'd be watching for. Same type of deal. We just want to see on something like this, bust over $97, or just give us some kind of indication that it's going to hold this support. You want to buy it right now, that's where your stop loss goes, probably under 95. Give it 50 cents or $1. And if it breaks, say, under the low of this candle right here, if it breaks 94.80, then you cut it off and you try again once it comes back towards highs. So like it, very nice. And lastly, we have Cody. What kind of company is this? Personal products, consumer goods. Okay. So 500 million shares in the float, 450 million shares in the float. It's got 8% short interest. Nice average volume. That's good. What's the reason for this gap over here? That's my question. I always want to know what the reason is for these gaps. So November 9th, 2016. Cody misses street first quarter forecast. So earnings miss. Not a huge deal. Companies miss earnings all the time. Sometimes it's an opportunity to get in low. I do like this. I like these kind of beaten down chart patterns where there's a bad news of some kind and then they kind of go sideways for a while. It looks like $19 or $19.20 is sort of the resistance spot to get over. I always like to look for areas rather than specific prices. And so you can see this still has a pretty big range right now, so it might need a little bit more time, but it sure is trying to hold these lower support levels here. It's definitely trying. I'd want to see maybe a couple more tests of these highs over here in the 1930s, and then whatever this was, 1937, and maybe a breakout over like 1950, right? The next round number up might be a good spot to look at it. So I want to see a couple more tests of these highs and potentially a couple more failures, and then I'd also want to see some volume expansion. All right, so I want to look for times when we see the volume start to build like we did over here. We went from 3.9 million to 6.2 million to 9 million. So just over a 3-day period, you can see the volume start to build. And then we get a little sell-off back to 3. Now we're building up again to 6. We're up to 6, right? So I just want to see, I'd probably want to see it come over 9 million, right? So I want to see like 10 million or 15 million shares in a day. And that would be my indication that this thing is really starting to heat up. Once it comes over 1950, your target's going to be initially probably $20 and then into the gap up to 22, give or take. So there you go. There's Cody. Like it. It's a little bit high float. It needs a little bit more time, but overall, I do like it. And I believe that's it. Yeah. Okay, cool. So thanks once again, guys, for tuning in. As always, much appreciated. Like I said, make sure you hit up this discussion request here and talk about how we can give us some suggestions on how we can improve these things. If you want to see any other kind of content delivered, just let me know and we will deliver it. In the meantime, feel free to subscribe to my newsletter, check out my blog. All of that stuff is posted in the description of the video. And as always, like, comment, subscribe. If I missed any of your, I think I got all of them today, but if you happen to see this video and you missed the thread, you want something analyzed, just post it in the comments of the video and I'll get to it early in the week via text. I get emails whenever people comment on the video, so I can get to them pretty quickly. So just drop it in the comments there and we'll be off to the races. Thanks once again. Hope everyone has a great weekend and I'll talk to you next week.